Good afternoon, everyone, and welcome to Trending Thursday. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Glad to be here. One of my favorite days of the week is Trending Thursday, where we get to go live on YouTube. Me and my producer, Joey. Say hi, Joey.
Hi, Joey.
If you can hear me loud and clear, type of VV Nation in the room. This is where, I wonder, is this where VV Nation started, or was that in the Jockey Club?
No.
It was here. All right, it was here that on YouTube, VV Nation kicked off. VV Nation stands for VectorVest Nation. All of the people that are here supporting the channel. If you're new, welcome. Glad to have you here. If you like the content, by all means, please put your comments in the room. We will do the best that we can to answer as many questions or comments that you have setting up in here. I got a really good show for you guys today, especially talking about the meme stocks that are taking off like nobody's business. And you know something? Has the train left the track yet? All right, we're going to talk about that today. They are rocking and rolling, but let me be clear. When I talk about stocks, it's not about what you want to hear. It's always going to be about what you need to hear. So sometimes many of the things that I say may not feel or go in line with what you think, and I'm okay with that. But I want to be responsible in the information that I bring to you, because this should be a room of investors in the market, and I'm going to do the best that I can to bring that information to you to help you make the right decisions, all right? As I look, there's a lot of new people, and again, I always ask, share the content that you see here on YouTube with your social circle. Let them know what we're doing here on Trending Thursdays, and that way we get more people, we grow the channel. But big thing, if you haven't subscribed to the channel yet, please hit the subscribe button. You know something? I noticed that there's still a lot more non-subscribers to the channel viewing the content than subscribers to the channel, which means there's a lot of backseat Baptists sitting in the back just looking and not subscribing. Do not be afraid to subscribe. All right, so with all of that being said, we always start off with what's going on with the market. Meme stocks, Stephen, are stocks that are being heavily touted by Reddit. All right, and they are on a move, and you know, those stocks, we're going to get into that in a moment. All right, we're going to get into that in a moment. We always start off with what's going on in the market. Many of you have seen the market going down bigly today. So let me bring on our market timing graph, or look at our homepage of market timing. For those of you who are not subscribers to the software, you have an opportunity to take advantage of everything that you see here, everything that I do for 99 cents for 30 days. But guess what? I got a surprise for you. I may be able to tell you that you can get into the VectorVest software for free, because we've got a special running, and we'll talk about that in a minute, all right? So many of you still sitting on the fence, deciding what you want to do. We're going to give you an opportunity to take a free trial to the VectorVest software during a contest that we're running right now. And again, we'll get into it. So from a market timing perspective, this is what's going on. This is the homepage of the VectorVest software. It lays out what you need to know as an investor in the market or a trader in the market. to know what to do. Why? Because the market's direction affects 80% of the stocks in the market. Right? And that's important. We see today that the market is down bigly. Everything down over 1%, to include our VectorVest composite, which tracks the move of over 8,500 stocks in one ticker symbol. The Dow is down or just sitting at about 400 points. The NASDAQ down over 2.5%, the biggest mover to the downside today. The S&P pushing 2%. The VectorVest composite right at 2%. Today is a bloodbath in the market. A lot of people say when you see blood in the street, that's the time to buy. Well, I'm normally okay with that until I move over to our color guard, which as a traffic light tells us still slow down. Don't be real quick to buy new positions, and always don't be afraid to take some of your positions off the table that have made money. Take that profit. But the main color you see in our color guard is yellow. When you get to a yellow light, what do? You slow down. Unless you're Jay living in New York, you speed up. All right? And I'm a New Yorker too, so I tend to want to speed up, even though I live in North Carolina. But from a general perspective, this is still a time to be defensive in your positions. Be careful about new positions that you put on. And again, do not be afraid. Do not be afraid to take some profits off the table. And bigly is not a word, but it could be a Glenism. And if anybody knows me, I have a whole book of Glenisms, and I'm thinking I'm going to put bigly in there as a Glenism. So market's down today. I'm letting you know that from an overall standpoint, to be defensive in your portfolio. If you're more of a conservative investor, we do have a market timing call, which says that the confirmed call is still up. Just manage your long-term positions, learn to sell covered calls, learn to buy protective puts, those kinds of things, especially if you're in stocks long-term that pay a dividend, and that's important. I will never tell you to close out of a long position, especially if it pays a dividend, but you need to learn how to protect that long position so that you can still protect the stock and get the dividend. All right. So now we see what's going on. Keep in mind, one day doesn't make a trend, which is why I look at the color guard from an overall perspective to help you to know what to do with the current stocks that you hold right now. Now that we've got that information, let's go step out and see what's moving the market in the direction it's going right now. We're going to go out to our first story, and Joey, it went away. The stories. Where do I get to my story? Oh, I knew that. I got to go down there. I knew that. And we're going to click on the first story. Now they can see it. There we go. That's why I have Joey. Joey is awesome. Say, Joey, I'm awesome. Mm-hmm. That's not, you're supposed to say, I'm awesome. You are awesome. All right. So here's our first story in regards to the market. What's really making the market move higher? It is the anticipation of more stimulus. There's no ifs, ands, or buts about it. All right. Prior to that, it was the vaccine. The vaccine is already getting out. A lot of people are getting inoculated. My wife is about to get her second shot next week. The VA, I'm a vet, and the VA has offered me or invited me to come take my shot now. I'm going to schedule a day and a time to go get it. And I think that as that comes out, more and more people are feeling more safe going back out during this pandemic. Now, the other side of what's really moving the market is this stimulus. $1.9 trillion COVID stimulus relief bill on track to hit Friday milestone, on which it's going to be voted on in the House, and then it's going to be passed over to the Senate for passage. Congress is rushing to complete the $1.9 trillion stimulus package with $1,400 checks in the next few weeks. Here's what you need to know about where the bill stands. The story is a good story. I'm using it today because that's the headline, and I think you need to know that, all right, because that's going to play a role on what happens or not. If the stimulus bill gets voted down, that's going to affect the market in an adverse way, and the market's going to have a good free fall for a little bit. If the bill does get passed, that brings up that more people are going to have more spendable cash. They're going to be able to put it back into the economy, and that's what the stimulus bill is designed to do. But you know something? There's another side of it. We are growing our deficit exponentially. That is a lot of money that's out there. And no matter where you sit on, well, that's too much money out there, or, hey, people need it. I'm on the side of people need this money. They need to pay their bills, especially if they're not working. They need this money. All right, so there's the good and the bad and the ugly that goes along with this, but people need relief, and the bill is going to help them in regards to that. All right, what else is moving it? You know that Fed Chair Powell was talking to Congress last week or earlier this week, and this is big. All right, Powell pledges to maintain the Fed's easy money policies until the economy recovers. What does that mean? He's going to do everything that he can to keep buoying the economy, to keep it from falling due to the pandemic. So what tools do they have? They're going to keep interest rates low. Now, I'm going to give you my insight in regards to that. At some point in time, inflation is going to cause a problem, and I think that the Fed is going to have an issue with trying to keep interest rates low for as long as they think that they can. If inflation gets out of hand, that means prices rise. As prices rise, the economy can keep just running rampant and hot. How does the economy get toned down? You raise rates, but the Fed is saying, nah, it's not that time yet. And they're saying that they're not going to raise interest rates until next year, possibly. I honestly think that if inflation does get out of hand, that they're going to have no other choice but to raise the interest rates. Now, the other side of it, Wall Street finishes up, and this was on the 24th, as the Fed Powell soothes inflation fears. There it is. All right, so that was the big question on everybody's mind was, where is inflation? What do you think about it? And Powell sat back and said, we got this. Inflation's all right. It's manageable. And I think that they took the inflation rate, they spread it out a little bit to give the economy a little bit more wiggle room so that they don't have to raise rates. So keeping that in mind, and there you go, Isidro says 23 trillion in debt. That's a lot of money. That's a lot of money. And right now the market is lower, Marie, because of a lot of different things. I don't always have the answer to why things are always going on, but the market is lower today, and it is what it is. A lot of stocks, I'm a big believer that in anticipation of the stimulus bill, this market has been rising like nobody's business, Marie. And I'm thinking that a lot of people are taking profits off the table. I'm one of them. I've made a lot of money in a short amount of time. Can anybody out there say the same thing? I want to hear that. Has a lot of you made a lot of money in this most recent run up? And if you have, type of me in the room, because, as the market goes up, as volatility increases with an up day and a down day, an up day and a down day, that adds more precedent to we are looking at a toppy market. And if that's the case, a lot of people are taking some of that money off of the table. And I'm thinking that is more in line with where I stand right now in regards to why the market is running down. All right, that's what I think. All right, so now in regards to soothing the inflation fears, how about this? Blue-collar jobs boom as COVID-19 boosts housing, e-commerce demand. Absolutely. Housing is increasing. You know why? People are moving out of their inner city homes, all right, where they needed to be close to work because the paradigm shift in the workspace has changed. A lot more people are working from home. And if that is the case, then why not move outside of the city where you can buy a home where you could be a little bit more comfortable than trying to live in the inner city space and try to make a home office in an inner city space. Think about that. And so I'm thinking that the building industry is taking off bigly. I said bigly. I still say bigly. I can't say bigly. So, yes, I shouldn't be saying bigly, but I still like it. All right. So watch the building industry. Home prices are going to rise. I think that eventually, as home prices rises, is going to be more of a seller's market. I think it's been more of a seller's market for quite some time during the pandemic. Houses are not staying on the market for very long after their listing because more and more people are willing to move outside of the city into a suburban home because it offers them a better opportunity to work from home. All right, so what is the Fed's job? To look at inflation, to check interest rates, and to increase jobs. Make sure that we're fully working. And I'm thinking that you got to watch this, that if the jobs are picking up, then that's a beautiful thing. All right, so let's go look at some stocks that take all of this information into hand. Get back into the software. And here's my watch list of stocks that I am going to look at today. Notice we have 13 stocks. They're all sorted by our master indicator, VST. So the stocks that have the best combination of value, safety, and timing automatically rise to the top of the list. If you're not a subscriber to the VectorVest software and you decide to become one, this is one of the first things that you need to do to let VectorVest do its job for you. Once you build this watch list, you can very quickly discern which stocks are doing well for you and which stocks are hurting your portfolio. So as I created this watch list of all of the stocks that we'll cover today, I can quickly discern which stocks are the better stocks that we'll talk about today and which ones are the weaker stocks that could be hurting us today as well. Notice that my meme stocks are at the bottom of the list. We're going to get back to that in a moment. The two stocks that I look at for monitoring the market are the S&P 500 or the spiders and the VectorVest composite, which as a VectorVest subscriber, you have access to. Remember, that VVC tracks the movement of over 8,500 stocks in one ticker symbol. So as I highlight them, I'm going to right click. We're going to view the stock graph and let's take a look at them. Put them on a 1-year graph first. That's the market, folks. That's the S&P 500 rocking and rolling. And when I made the statement about people making money in the market over this most recent run, and that's since the coronavirus hit, rebounded, and that's the market. That's the S&P 500. On my graph, I do have levels of support and resistance. I have a 20-day exponential moving average. I have volume. I'm going to take off earnings per share and growth for a moment. And I want to make sure not only is the market rising, is it doing so with volume? Big down day today. I'm going to move this from a 1-year graph to a 3-month graph. And why do I do that? Because what happens every 3 months in the market or on stocks? Earnings. Earnings is the biggest mover of a stock's price or of a market. There's only 3 things that move markets globally: earnings, interest, and inflation. 2 of those things we talked about in my first story was interest and inflation. Interest rates are still low. Inflation, which is not an issue yet, is starting to become an issue. I went to fill up my Ford Excursion and I put gas in it. I got a 40-gallon tank. I went to go put gas into it and I was like, yeah, this ain't so good. Why is that happening? Why is oil rising? Because the demand is increasing. Prior to this current administration, and no, I am not throwing politics out there, but we had an onslaught of supply. That supply is dwindled. Now we're getting into our own inventories, which is going to start to create demand. What have I always said about oil? Oil gets moved by demand, and demand is starting to pop. I'm probably going to do a story on oil next week because it might be an opportunity to start to look at oil. All right, it's going to be an opportunity, and we will talk about that. As we look at the S&P 500, looking at that 20-day exponential moving average, how about currently right now it's below? That's a bearish sign. Remember back here, it fell. Then you look for a better buying opportunity to get back into the market. How about when the S&P 500 gets back above that 20-day exponential moving average? Beautiful opportunity to get back in and look at where we are right now. Let's move over to the VVC. Same scenario. They look a lot alike, but remember, the VVC tracks the movement of about 8,500 stocks. Right now, currently intraday, below the 20-day exponential moving average. Look at the volume on the 8,500 stocks that we track. There's a lot of volume, whether bullish or bearish. The volume is there. currently below. This is a time, as I mentioned, you're defensive in your stocks. I'm not telling you to close out of everything. I'm not telling you to panic. What I am telling you is to be defensive, because now as the market starts to fall, I look for some key levels of support. So let's do this. Let's go put on a horizontal line. That's a beautiful level of current support sitting at about $59.43 on the VectorVest composite. Let's do the same thing on the S&P 500. Let's go draw a line. I've got a couple of lines here. I've got one at 368, and then I've got a solid one sitting right here at about 364. Those are the levels that you need to look for. As the market starts to fall, tighten your stops. If your stocks get stopped out, that's a good thing. But if I'm looking to see if the market has more downside, I'm looking at these levels of support to see if the market falls through those levels of support. That's what I see right now. We understand what's going on from the homepage of the VectorVest software. We understand what's going on from the standpoint of news in the economy, what's moving the market. So based on all of that stuff, does anybody have any questions? And how many miles per gallon? I get about 12.7 miles per gallon in my excursion. Now, Joey's got a Tahoe. How much do you get?
That says how many gallons per mile.
How many gallons? Listen, my truck goes from 0 to 60 in 30 days. I'm sorry, in 3 days. Once I'm going, though, don't get in my way. Don't get in, because I ain't stopping. All right, but yeah, I got about 12.7 miles to the gallon. Why is Torch going down, and should it keep rising? USA Fitness Equipment Depot, I've already done a video on Torchlight, and I'm thinking that once Torch and Meta Materials merge, that Torchlight should take off. Once that company gets onto the NASDAQ, I think a lot of that is that they needed to get onto the NASDAQ. Torch will no longer be doing petroleum stuff. It's all going to be about lighting stuff. So I think Torchlight has good upside potential once the stock merges. But I've already done a video. Check it out if you haven't already.
Put it in the chat.
All right, is Torch done? I'm not saying that it's done. I just made mention. I think it's got a lot of good upside potential. All right. Anybody have any other questions? And as far as regular stocks that you're typing into the room, King Aries, I'm going to give you an opportunity to look at individual stocks. I'm going to give you an opportunity to look at individual stocks. Ron, we're going to talk about that in a minute. All right, if I've got no questions about what's going on in the market, I am going to move on to the next story. All right. Good. All right, so I'm going to close out. Now that we at least have an understanding of what's going on in the market, use that data, use that information to manage your trades. And if you pick up new stocks right now, make sure you're buying them on an up day. And on a down day, don't panic. And if you're looking at stocks and holding stocks long term, do not use intraday information to close those positions, because you will succumb to market noise. If you're investing on stocks on a long-term basis, use the end-of-day data to manage those stocks. Does everybody understand that? Because that's so important. Type a yes in the room if you understand that, especially if you are in longer-term stocks. Use end-of-day data to manage those trades. All right? Because that's huge. Do not use, JT says no, intraday news or intraday movements will bounce you out of those stocks, JT. All right? Especially, and you will get out a lot earlier than you want to. You will get out a lot earlier than you want to. Use the end-of-day data to manage your long-term positions. All right. Now, let's get into my next story. All right. And the next story is, I'm sure that everybody and their mama want to know about. Why is that? Because it's the meme stock. Somebody asked me what a meme stock is. These are stocks that are part of the Reddit movement on sticking it to the man. All right, sticking it to the hedge funds. Whatever side of the fence you're on, that's on you. Now, what would I say right now? The people who were the diamond hands that were holding on to these stocks, two of which I'm going to talk about, GME, GameStop, and AMC, the diamond hands so far are paying off. Now, I did a video, a rant video, and Joey cut it out for me, a rant video on AMC where I said it was irresponsible to tell people to buy more shares. I still stick to that because as an investor in the market, I do my homework, and you know something? I'd rather buy into a stock that's doing what I want it to do, which is rise in price, than to sit and try to catch a falling knife. I told you, I'm not going to be here to tell you what you want to hear. I'm being here to tell you what you need to hear from a responsible standpoint. If a stock is falling and you still like the stock, wait for the stock to give you an opportunity to buy. Now, a lot of people will say, well, wait a minute, what's the goal? The goal is to buy low and sell high. Then let me ask you this question. How low is low? You don't know because the stock's price can keep going lower and lower, and a lot of people dollar cost average going down. All right, and a lot of people are sitting here going, well, how about I made my money back? All right, and that's fine. And for that, I applaud you. You took a calculated risk, and those diamond hands paid off. But you know what happened to some of these people? They bought into the stock, got beat up, and they got knocked out the stock. They got knocked out the stock, and now they're sitting back going, man, I should have held it. No. Let me explain to you, as we analyze the stock, that it probably still may not be the right play at this time. It may be going up. You could make some money. Okay, fine. It's not going up on the fundamentals at all. It's going up because there's a movement behind the stock, whether it's GameStop or whether it's AMC. Now, GameStop, the chief financial officer stepped down. And what moves the stock's price? I think about that. What moves the stock's price? Innovation, coming up with new product, earnings. These are the things that move a stock's price. And when I look at GameStop, GameStop is looking at trying to move more over to a digital format. So you know what I think helped to save GameStop right now? If you look at the new gaming systems that came out, they are still giving you an opportunity to buy discs. GameStop is in the business of selling those discs. Now, if the idea is that GameStop wants to move over to more digital content, well, how about if I own a PlayStation, I can go to the PlayStation store and get my content. If I own Xbox, where do you go out to? You go out to Microsoft? Is that what it is? Microsoft store?
Yeah.
To get my digital content. Do you not think that if I've already got the games and I don't want to have to get up to go to GameStop, why not keep a one-stop source, for me to go get my games? So I'm not sure if that innovation of moving over to a more digital format is going to help the stock. But the big story here is that the CFO stepped down because he wasn't in line with the direction that was going on with them. How about AMC? AMC rallies 9% after the theater reopening plans in New York City. Now, there are some good things behind the AMC stock. One, it is the biggest theater out there, all right? And they host theaters all over the place. What's been hurting them the most? The closures in New York City and Los Angeles. And as coronavirus starts to stem down a little bit because of the vaccine, New York is starting to open up their theaters. Los Angeles is thinking about starting to open up their theaters. AMC is going to move. Now, I'm going to add a personal note here. My wife and I went out to the movies, all right, and when we ordered the tickets, we had to pick seats because they were spread out. All right, so you can only sit, they're trying to social distance. Totally understand. Now, when I went to the movie theater, they renovated the movie theater. The seats were huge and they reclined. And this was in Mooresville. All right, the seats reclined. They were bigger seats to accommodate the whole idea of social distancing. Nobody was in the movie theater. It was my wife and I and another couple. That's it. So now, from that perspective, and that's a personal perspective, from that perspective, I think that the streaming scenario is going to affect AMC in an adverse way. Why should I want to go out to the movie theaters? My wife said to me, she says, honey, would you like to take your wife to the movies? I was like, okay, sure. I think that you're still going to get that people do want to go and snuggle and eat popcorn and drink a $50 soda in a movie theater, all right? But when I can pay $20, $30 to stream it from home, a brand new movie, what incentive do I have to go back out to the movies? That's my opinion. All right, so I'm talking on both sides of the fence. I have personally just recently gone out to the movies. We were spread out, all right, but nobody is there. Nobody is there. I think that, though, as the vaccine gets more people get inoculated, that may open up. We'll see. All right, we will see. So now, with all of that being taken into consideration, let's go take a look at the real story behind these stocks. All right, let's take a look. And, you know, the image size and sound quality, I hear you, Sirocco. You love the movie theaters, but I'm also old. You know, I don't know if... Is it the older generation that enjoys the movies more, or is it the millennials that still... I think that the millennials, more so with the I want it right now thinking, streaming is probably going to be the way for them to go. Again, that's just my opinion. All right, that's just my opinion. And concessions are expensive. We went there, and man, I spent like a mortgage payment to buy concessions. But that's part of the movie theater scenario, right? All right, let's take a look at the stocks, GME, AMC. Let's analyze the stocks. Remember, this is what you really need to know. And people will always tell you, do your due diligence. And here on this channel, we are doing our due diligence. GME is trading at $146. It's up 54%. It was up even more than that earlier. You know why the price dropped down? Because a lot of the diamond hands that were holding the stock did what? Took their money off the table. Who's buying into it now? The new person is saying, man, this stock's going up. I'm going to make some money. Well, if I analyze and do my due diligence, the stock is worth $4.59 while it's trading at $143. Well, let's analyze it further. VectorVest has indicators that will help you to analyze stocks better than anyone out there. Relative value, the stock's upside potential over the next 1 to 3 years. Will this stock outperform the market over the next 1 to 3 years? Cast on a scale between 0 and 2, where above 1 is favorable. The stock's relative value on that scaling is at 0.13. The stock does not have good upside potential. This stock will not outperform a AAA corporate bond over the next 1 to 3 years. Okay, let's look at the safety, an indicator of risk on the stock. Relative safety sitting at 0.85 on that scaling between 0 and 2. This is a risky stock. As a new person buying into this stock because of the movement, watching that the stock is up 50, 60%, that becomes appetizing to you. Well, the stock is not a safe stock. All right, fine. Well, the fundamentals are not there. Let's see if the stock's in an uptrend. Relative timing on that same scaling below 1. The stock's not in an uptrend even with the big move on the stock. Man, this is the due diligence. And you know something? If you want to take advantage of the stock because of the big move, that's on you. But understand that it doesn't have good upside potential, that it's not a safe stock, that it's not in an uptrend, and you still want to take that chance because of the movement and it's going to make you some money, by all means, go have at it. But has the train left the track? I don't know. If you weren't the ones that were in it and holding it when it got smoked in the beginning, you might be on the outset holding the bag as the stock's price starts to fall. Just keep that in mind. The stock has negative earnings. They are growing it at a clip of 7% a year, though, to the positive side. Let's look at AMC, trading at $9.10 with a value of 39 cents. Upside potential worse than GME. Now, I told you the good things that I liked about AMC, but is it fundamentally sound? Relative safety below 1. This is a risky stock. Is the stock in an uptrend even with the big move up today? And it's less than 1% up. It's at 0.52. The stock's not in an uptrend. Look at the negative earnings on it. Now, I will state that the earnings going down has been a product of the pandemic. They're losing money. I totally understand that. But how about they're growing their earnings at a negative clip of negative 10% a year? If I'm doing my homework and I'm trying to make a decision, and a lot of people, I got a lot of flack about it saying, I like the stock. Tell me what you like about the stock besides the movement that's going on with pushing the stock's price higher. What do you like about the stock? Well, the innovation. Where's the innovation? I'm not sure. Well, how about the earnings? It's negative. I'm not sure about the earnings. Well, how about the upside potential? It's not there. So knowing that these stocks are being moved by a movement because they're sticking it to the man is one thing. But do you really want to buy the stock because everybody's telling you it's going to go to the moon? Think about it. It's your decision, though. I'm just presenting you with the information that you need to hear, not what everybody else on YouTube is telling you that you want to hear. Oh, it's going to go to the moon. Have the diamond hands, hold on to the stock because it's going to go to the moon. All right. Understand that it's a calculated risk. And are you willing to take the calculated risk? All right. So I'll probably get some hate mail for that. I'm okay with that. My job is to do what I do. You do you, boo-boo. If that's what you want to do, I'm not going to stop you. I just want you to know what's going on. All right. Let's right click. Let's view the stock graph. Let's go take a look, put it on a 1-year graph. That's the Reddit move. These are the diamond hands. It's pulled up, but look at that. I'm getting a lot of selling pressure on that stock. Closed candle, it just moved up above the 20-day exponential moving average on a lot of volume because the Reddit move is moving it. Absolutely. I've got a closed candle where the price, the open price is at 169. The current price is at 148. It's going down for the day. This gap up, you know who's doing that? The diamond hands that were holding it down here. You know who's getting affected? The new people jumping on board trying to take advantage of that big move because they see it on the news. I'm trying to give you some helpful advice. If you want to take it, again, that's on you. If I'm thinking about taking the stock, I need the stock to continue moving higher before I pull the trigger on it. All right? So let's go to the next stock. Somebody said they're not boo-boo, they're yogi. How about AMC? Same scenario. Now, interesting about AMC, it started moving. It did a couple of things. It broke through a level of resistance at 626. It went up. This one has more of a track record as compared to GME. But again, AMC does have some positive things behind it, more so than the GME. It's pulling back. Why? Because the diamond hands back here are doing what? When the stock's price was down here at about, what's the price here? At about 555. Yeah, they're thinking about taking their profits. All I'm saying is let the stock come to you. Don't buy off of the news. Don't buy off of the movement. Let the stock come to you. All right? If you really like the stock, let the stock come to you. All right. Now, let's go see. Do I have any questions in regards to this? And I had to do this story. Why? Because it's hot. Trending Thursday is about what's trending. So I had to do the story. All right. Does anybody have any? Now, how many people hate what I said? I'm okay with that. How many of you totally disagree with me?
Those people have left.
Oh, they left? Those people have left? Okay. Joey says those people have left. What did you have? All of what you're saying is the best investment, but that is not the issue here. What about the short squeeze hedge funds? I understand that. Remember, one of the first statements I said about this whole thing is that they were sticking it to the hedge funds, and I totally understand that. But a lot of the people who are jumping on board with this don't understand the calculated risk behind it. This is a speculative trade based upon movement. I got nothing to do with liking the stock. And if you're okay with the big jump and the volatility on it, and you're okay that you want to get in and get out, I'm not stopping you. I'm not telling you not to do it. Just know what you're getting into before you do. All right. That was great, Glenn, on GME. That can be applied to so many stocks right now and always. I got you. I don't want to buy the stock as an investment. I want to consider purchasing as a quick, rich, quick scenario. You know something, Saruku? That doesn't happen very often, and I'm not sure that that's going to happen here. At some point in time, can the stock maintain the level that it's at? That's got to be something you got to do your homework on. The stock's fundamentals ain't there, but if you're doing it as a quick, rich, and I think that the whole Reddit thing is all about I'm going to invest in this and make a lot of money quick. Understand that there's consequences to your actions. As an investor in the market, I do my work to make sure I do what I got to do. All right, I agree. Appreciate you telling us what you're saying makes sense. Anyone buying puts on GME, that may not be a bad play. But you know something? I'm afraid to buy puts on it because then Reddit's going to come running after it all over again. All right, GME is not investing. Absolutely not. This is more of a calculated risk. And as long as you know what's going on, by all means, take it. Saruku, if you're all about making it quick, do it. But as quickly as it goes up, as you saw on the graph, is as quickly as it falls down. If you're okay with that, then by all means do so. All right, what about GME short interest? I hear you. I think the short interest that was out there way high before Reddit took advantage of it is not there anymore. I'm going to do something real quick. I'm going to do this on the fly. I'm going to go to Yahoo. And I'm going to go to analysis real quick. Let's go see. That's not what I want. Maybe statistics. That's not what I want. Maybe it's that's not what I want. There's one of these things I want. Maybe it's the financials. Do I have anything here on the squeeze side? Dagnabbit. Is it the profile? That's not what I want. There's one of these that I look at. Oh, here it is. All right, share statistics. There it is. It's still up there. Short percentage of shares outstanding. It's only 30%. Remember when Reddit went after them? They were up 140%. So the squeeze is not unlike any other short interest that's out on a lot of stocks. All right, so I did that out there. I wanted to do that on the fly because I think that's important. I totally agree with you, Bud. Great work, and thank you for your time and work. You got it. I think that this is a very important subject that's out there, and people need to know what they need to do. Implied volatility on GM options is sky high. You know something? Then I need to probably be a seller of an option. But be careful with that, Paul. Just be careful with that. All right. That's enough on this story. Whether you like it or not, I love the conversation that we're having today on it. And again, options prices are off the chart. If you're going to be an options trader on it, you need to be an options seller. You need to be whether you sell a spread or whatever. If the premiums are high, be a seller taking the premium. I'm not stopping you from doing any of that. I'm just telling you what you need to know about the stock. All right. It's stick to buying and selling signals from VectorVest and you'll be okay. I'm all for that too. That was a good conversation, huh? All right. So real quick before I get to the next story, I need to tell you about two things that we're running. All right. The first thing is, for any of you who are not subscribers to the software, if you've been thinking about taking the subscription, you're hawking on the 99 cents trial. How about this? We have a course running called the 28-Day Portfolio Challenge. Sign up for it. It's free. You enroll right here. You click on Join the Challenge. You join it, send it out. We'll give you access to the VectorVest software, 28-day to clean up your portfolio and make it better. We will walk you through what you need to do to make that happen. We'll talk about the stocks that you own, what's hurting your portfolios, how to find new stocks, how to use market timing. If that's something that you're interested in, folks, it's free. We will give you free access to the VectorVest software during this challenge. Folks, you need to do it. All right, everything, and you're getting access to the VectorVest software during the challenge. All right, the next thing that we're gonna do, I love this. I put a video out on it for the Stock Madness. All right, the Stock Madness is like March Madness, except we're doing it with stocks. We match up stocks just in brackets, just like we do for March Madness. You see that on the screen? You can win up to $250,000, $250,000 cold hard cash, but you got to have a perfect bracket. That's a tough thing to do, but even if you can't do that, we've got a lot of other prizes, and one of them gives you a free year to the VectorVest software. If I go to the prizes, the first prize is $1,000 educational credit and 1 year subscription to the VectorVest Premium. Woo! All right. And then all of the other prizes are all about being able to use credit towards your VectorVest software. All right. Whether it's on a course that you're interested in that you didn't want to pay for, if you win, we give you credit towards any VectorVest product. And the 10th prize gives you $150 worth of VectorVest educational credit. Folks, this is, can you do better? Maybe throw in a mug with a free trial. Should we give away a mug today? Joey says I can give away a mug. All right, what do I need to type?
We'll do it after.
All right, after the next story, I'll tell you what keyword to type in for a mug. Mark, thank you for giving me an opportunity to give out a mug. I'm going to give out a mug today. All right, I'm going to give out a mug today. I don't type in mug because that may not be the word, Murillo. Don't type in. All right, it's going to be VV Nation. Type in VV Nation to be entered in to get a free mug. Looks just like this. Looks just like this. All right, or you can go to our VectorVest store to purchase the mug as well. It's all about Mark. Mark did it. There you go, Mark. All right, so those are the two things that it's free, folks. Both of those are free to everyone. Share it on your social circles. It is free. Both of those are free. You can't beat a company that's giving you free stuff. All right, next story is going to be on coronavirus. All right, coronavirus, a lot of people getting inoculated. A lot of people, I'm getting ready to go up to the VA site so I can get schedule my day and time for my inoculation. But there's a couple of things that's going on in this field. Pfizer-BioNTech started a study to evaluate the COVID-19 booster. Why? Because we're getting variants. I think we're up to either 3 or 4 different variances that are coming across around the globe. And the vaccines, a lot of people are starting to think about adding another shot to go against the variances, so they're working on that. That's important. Moderna doing the same thing to begin clinical trials of a COVID booster shots for the variant from South Africa, sends to NIH for studies. So that's 2 of the biggest ones out there already looking at subscribing to a booster shot. Moderna, now this is the other side of it. Nobody ever, you knew that this is going to be a story that had to come out. Moderna expects $18.4 billion in 2021 sales from COVID vaccine. That's a lot of dough. And the chief medical officer is departing, don't know why, but that's hugely good, or not, depending on where you stand. That's a lot of money to be taken advantage of. I don't want to use those words, taken advantage of, but it's, it's out there. They got to make money, right? $18.4 billion. All right. Keith, I'm going to get to that in a second. Keith says, what about the Johnson & Johnson one-shot vaccine? Oh, yeah. FDA staff endorses Johnson & Johnson's single-shot COVID vaccine for emergency use, and it will be the 3rd vaccine out. Now, when I originally did this story on Johnson & Johnson prior to them getting out there was a story that showed that it was like 68% effective. But as I look more into the story, the FDA is seeing a higher level of effectiveness now as it's going into the FDA for approval. All right, so the FDA saw enough of effectiveness to start thinking about putting it out there, endorses it for emergency use. We're just waiting for the news to come out that says that it's okay. Now, a couple of things about the J&J shot. It's the one that needs the least amount of refrigeration. You can put it into your refrigerator for refrigeration, whereas Moderna's shot doesn't require as much refrigeration as the Pfizer shot, which needs to be specially refrigerated. So 3 different ones coming out. The choice is going to be yours of which one you want to take, and there it is. But the Pfizer shot seems to be the most effective, followed by Moderna, then followed by Johnson & Johnson. But I think a lot of people are going to be right on board with the single shot instead of having to get 2 shots, possibly 3, because if Pfizer and Moderna are working on a booster, that means you'll have to get a 3rd shot. I don't know how many of you want to sit around and get 3 shots. or I think that this is going to appeal to a lot of people to get the single shot. All right, so we put that out there. So those are and I got one other story. Here's another stock that we don't talk about yet. 12 reasons Novavax beats Pfizer for the titles of the best COVID vaccine. Novavax, as far as I know, is not out there. All right, but the Novavax COVID vaccine has the highest efficacy against the original COVID-19 and South African variant. I have not seen where Novavax is out there approved in the U.S. for a vaccine. Can anybody tell me different? It says the Novavax vaccine. Is that in a different country? I need to do a little bit digging in that. But the story says that the vaccine has the highest efficacy against the original COVID strain and the South African variant. I don't know where that is out there as a vaccine. It is not here. It is not here in the United States. It's the only major COVID vaccine that can easily be made into a multivalent vaccine that contains multiple variants in a single dose. So if that's the case, why have I not heard about it? It's Johnson & Johnson's for emergency use as a caveat itself. I don't know, Mavtis. I'm not sure. Novavax has a weird chart. We'll take a look at that in a second. All right, so I wanted to scroll down because in the story it gives a thing. Where is it? Man, it's way down here. Good googly muggly. There it is. So here's the vaccines that are out. All right. Redisposability for Novavax, yes. Ease of expanding, valiancy high, tolerability high. And it looks at the other ones that are out there. Moderna, Pfizer, AstraZeneca, and Johnson & Johnson. And I'm sure that the story is being very favorable to Novavax because that's the stock that they're talking about. All right, so I looked at all of these stocks. I'm going to go back into the software. I looked at all of these stocks. I looked at Moderna. How about Novavax is at the top of the list as well? Look at that. Novavax, Johnson & Johnson, Pfizer. Those are my four stocks. 1, 2, 3, 4. Yep, there they are. Let's analyze them real quick. Novavax, how come Moderna didn't? There it is. Novavax is actually undervalued. So is Moderna. Undervalued. That's two good stocks undervalued. Johnson & Johnson, undervalued. 3 stocks undervalued. Pfizer is what we call fairly valued. All right, let's go look at all of their upside potentials. Moderna, good upside potential. Should outperform a AAA corporate bond by 86% over the next 1 to 3 years. Novavax should outperform by 87% over the next 1 to 3 years. Johnson & Johnson should outperform that AAA corporate bond by 11% over the next 3 years, 1 to 3 years. But look at that. Pfizer, on the other hand, is not. Pfizer is the only company out there that did not take any money from the government to come up with their vaccine. Are they safe? Moderna's got a relative safety above 1, less risky. Novavax, not quite at 1, so it's a little bit more risky. Johnson & Johnson, it's the best safe stock as far as these stocks are concerned. Look at that. Pfizer's safety is not there as well. Let's see which ones are in the highest uptrends. Moderna at a relative timing at 1.08 in an uptrend. Novavax, relative timing at 1.14 in an uptrend. Johnson & Johnson, 1.09 in an uptrend. Pfizer, on the other hand, is not. So a lot of people keep asking me, well, why is Pfizer doing so badly? Well, they grow their earnings at a negative 5% clip. So what is important? Remember, what's important about a stock? Earnings. They've got positive earnings, but it's negative growing. Whereas I look at Johnson, positive earnings growing at a clip of 1%. But look at Moderna and Novavax. Look at their earnings growth rates up there. These companies are growing their earnings at a clip of over 50% a year. Now you can get a very good understanding of which coronavirus stocks are the better to invest in. Let's go. They're all highlighted. Let's view the stock graph. There's Novavax. Woo, the story was like, this stock is good. Well, it's falling below the 20-day exponential moving average. Volume is slacking off a little bit. That's why we look at the story, but we analyze the stock. And from a technical standpoint, I'm not feeling it right now below the 20-day exponential moving average. Johnson & Johnson nicely moved up as it started to come into fruition of coming getting close to be one of the vaccines. A little bit of a sideways move, currently below, but trying to get back above that 20-day exponential moving average. This is, Pfizer. Wow, Pfizer's getting smoked like a pound of bacon. And I love me some bacon. I look at that and go, exactly. Pfizer's a strong company. There's a lot of competition out there, but the company may not be nearly as well run as the other companies. Remember that negative earnings growth rate? That tells me something's going on in the company. Think about that, all right? And this has always been my stock of choice, Moderna, throughout all of this. I've got no qualms behind it. I think that it from the standpoint of the VectorVest analysis, is probably one of the better ones out there. Big pullback below the 20-day exponential moving average. I am not afraid to pull the trigger to get out of this stock, especially if I've made some money, or pull half off the table if I've made some money and wait for a better buying opportunity. For Moderna, I'm looking for the stock's price to get back above that 20-day exponential moving average if I'm out of the stock, all right? So that's my coronavirus story. Anybody else? NVAX waiting for EU approval, won't get FDA until late spring. Thank you for that, Mark. I appreciate it. Patrick Chu.
He won the mug, but he doesn't respond.
Oh, his name is Patrick. Patrick what?
Chu.
Patrick Chu. You won the mug. If you don't respond, I'm going to give you 10, 9, 7, 4, 2, 1. All right, that's Marine Corps accounting in case you've ever been through Marine Corps boot camp. All right, Joey's going to pick another person. Joey's going to pick
Give him a little bit longer than that.
Okay.
I just wanted
Well, Patrick Chu won, but if you don't respond, I'm going to have to give it away to somebody else. All right, any other questions on the coronavirus story? Thank you, Tony. Tony says, love the show. Hopefully, Tony, you subscribe to the channel. I hope you do. For anybody out there who likes the content that we're putting out there, please subscribe to the channel. Hit the bell icon so that you'll be alerted to all of the videos that we put out. All right, how to enter. You needed to just type VV Nation. Everybody already typed VV Nation. You can still enter. Type in VV Nation. CDXC treatment stage approval. All right, I'm going to do a story on CDXC, Bill. Steve Chappell brought that to my attention. I am going to do a story on that. All right, who's the winner? It was Patrick Chu, but he didn't respond, Robert, so I'm looking to put it out to someone else. All right? All right. If there's no more stories, how about making a special edition of VV Mug with Joey's mug on it? Joey don't even want to come up on camera. He don't even want to come up on camera. All right. Let's move from my coronavirus story. What's my next story? My next story is about Bitcoin. How many of you are still trading Bitcoin? Before I click on the article, how many of you are still trading Bitcoin as I drink my Starbucks coffee that Joey and I went to get today? No, I do not own Starbucks, and I'm not promoting it. I'm just drinking their coffee. I'm not a sponsor of who is this company? No, Starbucks. All right, so a lot of people are in Bitcoin. All right, so I'm not sure if you saw this, but how about Square buys 170 million worth of Bitcoin? So we know that Tesla bought some Bitcoin. Now Square is in it. We've already done stories where Square and PayPal are getting into that Bitcoin field. All right, it's happening. It's happening, and I'm believing that no matter what you think, Bitcoin is really becoming a solid business to have to consider. All right, it really is becoming a business that you really have to consider. So Square buys $170 million worth of Bitcoin. The company said it purchased approximately 3,318 Bitcoins, expanding on its October 2020 purchase. So now they're sitting at about 10,000 Bitcoin. They're sitting on about 10,000 Bitcoin. That's a lot of Bitcoin to be owning. All right, so let's take a look at the stocks that I honestly look at for that space. Block, which is an ETF that tracks the whole space. What else is in here? I'm going to look at Mara, and I'm going to look at, where's my other one? Riot. Where's Riot? Is Riot not in here? Joey, how did you not put Riot in here? Joey doesn't add stocks to here. I do. So yes, I'm not blaming you. I am blaming you, but I'm not blaming you. Block, Riot, and Mara. All right, Block is an ETF, all right, that tracks the whole space. I like this as a investment, a way to get around owning the very, very expensive Bitcoin. Why not track the whole space? This is a great way to take advantage of Bitcoin or cryptocurrency and one ticker symbol. Mara and Riot are bit mining machines or bit mining companies. Another way to take advantage without having to pay all that money for an expensive Bitcoin. All right, notice that both of these, all three of them are down today. And you know something? I want to show you something. As we look at these stocks, I want to show you something. Block, from a long-term perspective, if you don't want to get spooked out of the big pullbacks, how about the 20-day exponential moving average does a great job of keeping you on an end-of-day basis from getting you spooked out of it. Leave it alone. If the stock's price of Block goes below the 20-day exponential moving average, that's an opportunity to get out of it. Same thing with, so if I'm looking at this for the whole industry, I can use that to time when to be in and out of Mara. Mara recently, a couple of days ago, closed below the 20-day. Was that a good opportunity to take your money off the table? Absolutely. So what did it do the next day? Oh, man, it went up. I'm losing money. And now you look and go, oh, man, I'm glad I got out of it. It's back below the 20-day exponential moving average. And let's go to Riot. Riot, on the other hand, besides Mara, is still above the 20-day exponential moving average. From the longer-term play, for those of you who are playing cryptocurrencies, I like them all. But I would use technical analysis by looking at the charts to manage when to be in and when to be out. And our Gardania is right. Don't trade, but I own and hold. And Gardania, that 20-day exponential moving average backs up that buy and hold type of scenario. Always, for your long-term positions, look at end-of-day data and not intraday data. All right, Morley Zant, are you here? Here we go. Morley Zant, are you here? Joey told me to continue. I was going to sing the Jeopardy song. All right, Morley Zant, my next winner. Let's go see if you're here. If you're not here, sigh. Nobody wants the cup today. Hopefully, Morley, you are here. All right. If there's no questions on cryptocurrency, let's go to my next story. 5G, baby. 5G. Everybody knows 5G is rocking and rolling. All right, 5G is rocking and rolling. You know what just happened recently? Verizon is the top bidder on 5G spectrum. So now you've got to buy space in the 5G spectrum to increase your 5G spread. Verizon is out there. My son has Verizon. I have T-Mobile, and my wife has AT&T, and I'm moving over to AT&T. I like AT&T. They're not a sponsor of mine either, but I like AT&T service, always have, but Verizon is strong in this space. For those people who own Verizon phones, I haven't heard much in any downside talk about being a Verizon holder, whereas T-Mobile, we were Sprint peoples. They got taken over by T-Mobile. I'm not a fan of the T-Mobile service. As I look at my phone, I barely get service right here in my office, so I'm not a big fan. This is, again, strictly my own opinion, folks. Strictly my own opinion from what I own. I am thinking about moving over to AT&T with my wife, but my son, who's also a Marine, loves Verizon. I've watched him do speed tests on his phone, and sometimes it's better than his home internet. Verizon is strong. Verizon is strong. And I did a story last week, James. Nokia is in that space, but you notice the story really only goes after Verizon, AT&T, and T-Mobile. Nokia is not in there. Nokia just picked up a contract with a Brazilian company for their 5G. So I like Nokia and even though it's one of those Reddit stocks, that is one of those Reddit stocks that I do like. All right, that is one that I do like. All right, CIEN, Darshan, I am probably in the next few weeks going to do more on 5G stocks. As a matter of fact, let's go take a look at the rest of the stories. Darshan, I got something for you. All right. Verizon, AT&T, and T-Mobile, they spend $80 billion on 5G spectrum auction. So all of them went out to buy 5G spectrum. T-Mobile was only up, they only spent $9 billion. Verizon spent about $45 billion. AT spent right behind them. But T-Mobile only spent about $9 billion on the spectrum. I think that they're confident, but you know something? I ain't had 5G on my Apple phone since being with T-Mobile. Whereas my wife gets into certain spots with her AT&T and her phone will go to 5G. I ain't got no 5G. Who you got? Do you ever get 5G? So Joey will get 5G in Charlotte. When I'm in Charlotte, I get no 5G with T-Mobile. Nada. But I bet you on Verizon, right now, just looking at the strength of their signal, you'll probably get more 5G all over the place. Oh, Morley is here. Morley is here.
Yeah, connect to VectorVest.com.
All right, so Morley, you connect to VectorVest. Email Joey at connect@vectorvest.com to get your mug. 6G, baby, is coming. Wow, one bar. We got to get through 5G first before we even start to talk about 6G. All right. Another story in here. T-Mobile brings ultra capacity 5G to Miami, U.S. Department of Veterans Affairs. I like that story. As a veteran, when I go to the VA in Charlotte, I think that's huge to be able to have some 5G in the VA. And I think that's a cool story. And that's my service. Again, it's T-Mobile. But how about they're reaching out beyond just to the regular peoples? And not to say that vets are not regular people, but putting 5G in the Department of Veterans Affairs, the VA hospitals, I think is cool. I think it's super, super cool. All right, let's go look at my stocks. And who was the person I said I got something for? I forgot who it was. Whoever it was. Who did I say I had something for? Oh, it's Darshan. Darshan, I got something for you. All right, so let's go look at my stocks in this space: T-Mobile, Verizon, and AT&T. Analyze them. T-Mobile, overvalued. Verizon, overvalued. AT&T, fairly valued. All right, so with that being said, upside potential on these stocks. Verizon's at 0.94. It's not going to outperform a AAA corporate bond. T-Mobile in this space has got the lowest relative value in that it should not outperform a AAA corporate bond. And AT&T is just at that value of 1, which is the safest. T-Mobile is the safest. And which one is moving up the fastest? Looks like it's T-Mobile. Not above the value of 1, so it's not fully in an uptrend, but it is moving faster than the other two. Notice that all three have negative earnings growth rates. All three. You know something why I think that is? It's got to go with subscribership. How many of us quit our mobile companies and go to somebody else? So there's such a big fluctuation in how many subscribers to these main providers. I think that would affect its earnings growth rate. All right. So if you didn't win the mug, Joey says you can buy one below the video. You can go buy your own mug. All right, in our VectorVest store. We do. So here's the mug. Again, I was going to drink my coffee out of it, but I decided not to because Joey won't give me another one. So I don't want to mess that one up.
We need to get some likes.
We only got 125 likes. If you like the content of what we're talking about today, hit the like button. Smash the like button. All right, come on, folks. You can do it. Unless you really don't like it. If you really don't like it, that's fine. Then you don't have to hit the like button. But if you really like the content that we're giving today, let us know. Hit the like button. I'd really like for you to do that. All right, T-Mobile did jump up this morning, but look at the pullback. Closed candle. Stock with found a level of support. Big volume, too. Big volume on the pullback. Just be careful. I like looking at the 20-day exponential moving average, specifically for the wherewithal of knowing where I need to be with trading the stock. Verizon is currently above the 20-day exponential moving average. I really like the service as compared to in all three. It's moving a little bit of a channel, but currently above the 20-day exponential moving average. And the last one AT&T really in a big channel right now. Would love to see it take out that level of 29.77 before I jump on board with pulling the trigger on that stock. Anybody got any questions on my 5G stock? Oh, Darshan, I got something for you. How about I got a watch list of 5G stocks. So Darshan brought up about CIEN. I've got a watch list of 5G stocks. I bet you there's CIEN isn't here. I only looked at 3. So how about this? How about if I wanted to see which one out of 45 5G stocks that I have in this list, which one is moving up the fastest? Let's sort this whole list by RT. In the 5G space, let's go see who's got the fastest. Oh, Lenovo Group is up here. Is Nokia in here somewhere? Let's go 45. Let's change that to 50 so I can see all of the stocks. Now I can see all of the stocks sorted by RT. Let's go see. Lenovo is still at the top of the list. Micron is in here. Intel is in here. UMC. People have been asking me to do a video. Skyworks, TSM. This is the Taiwan Semiconductor, another big stock in this space. Where is Nokia in here? Someone, there it is. How about this, James? It's the last stock by RT in the list. It's the last stock by RT in the whole list of 45 stocks. All right, so there we go. All right, so Darshan, that was specifically for you. You were talking about other stocks that we're not talking about today, but we do have a 5G watch list that I can do the same analysis on. How about the one that's the safest? The safest one in here is Google, followed by TSM. I like that. Followed by TSM. Which stock has the best ability to outperform the market? Let's sort by relative value. Folks, see how quickly I'm able to do that on a whole watch list of 45 stocks? How cool is that? Which one has the, and you know, with all of that, where's Nokia here? Nokia, and this is from my main guy, James. He was part of the user group here in Charlotte when we had a user group. Where's Nokia? Dang, did Nokia go away? There it is. Nokia, as far as relative value, is not at the bottom of the list, but it's towards the bottom. It is definitely towards the bottom. All right, so there's that analysis. And Darshan, thank you for making me bring this up, because I think that it's important that, you know, I only talked about 3 stocks, but we have a watch list of these stocks that you can make a better decision on, especially if you own any of them. All right. Anybody have any more questions about my 5G stock story today? Because you know what comes up next. That's all my stories for today, by the way. All right, if there's no more, Salvatore, Nokia stopped dividends and I sold for a small profit. Is that what happened with Nokia? How about we want to see out of this listing, which ones pay the highest dividend? Whew, how cool is that? Let's go see who pays the highest dividend. AVGO has a dividend of $14. Woo! Dividend yield, 314. Earnings yield. Oh, I like that dividend too. That's a sustainable dividend where they make enough money to pay the dividend. Holy smokes. AVGO from a dividend play in the 5G space, folks, that may not be a bad play. Look at that. Good upside potential. Good safe stock that's moving up. Positive earnings, good earnings growth. How many of you knew that? Oh, how cool is it to sort by dividend to see which one pays the highest? How cool is that? Folks, I did that on the fly by the power of the VectorVest software. How cool was that? AVGO may be a great stock to take a look at in this space, especially from a dividend perspective. How about Verizon is up in the top of the list too? That's cool. All right. If there's no more questions, where do you get your list of 5G? Steven, in the software, we have special watch lists. I built mine. I built mine. Do we not have overview watch list? There we go. Overview watch list, 5G stocks. We have a watch list here for everybody who's a subscriber. There's 42 stocks in it. I've added 3. That's why mine has 45. All right, but there's your watch list. You wanted to know, Steven? There's your watch list right here in the software under the overview watch list. And I did that analysis. How cool is that? Let's go back to Dividend, sorting by dividend, Stephen. And AVGO still comes up to the top. Bada boom, bada bing. You know, for a lot of you people who are sitting on the sideline saying, you know, I don't know if I need to take this VectorVest software. Folks, if this doesn't help you, I don't know what else can. If this doesn't help you, and the ease of being able to find this information, if that doesn't help you, I don't know what else can. All right. So with that being said, you know what it's time for? It's time for us to look at your individual stocks. So start typing them in the room, and I will start. Joey's going to start giving me the ticker symbols.
Yeah, so we'll do that. PLTR.
PLTR, okay.
Somebody wanted Riot earlier.
We already looked at Riot. I'm not going to put it back.
Okay, Snap.
SNAP, Snap.
SNBR.
Oh, SNAP, SNBR.
PM.
STM.
SINO.
SINO.
PHA.
AP, Afria. Good. MPC.
Apps.
Digital Turbines. Lakeland.
NVIDIA.
NVDA.
WW.
Worldwide. Weight Watchers. I'm on Weight Watchers. It ain't working.
Are you?
No, I'm just watching my weight. Say again. HZO.
HZO.
Okay.
Apple.
AAP are the best stock in the world.
ABBV.
ABBV in the marijuana.
Sundial.
SNDL.
SONO.
SONO. Sonos.
FUV.
FUV. You say that wrong, you're going to cuss.
CLSK.
CLSK. FLGT. All right. For any of you who did not get your stock looked at, if you go to, Joey's going to put a link so that you can get a free stock analysis on your stocks as well. All right. So I didn't look at everybody's stock. You got a lot of people in the room. Got a lot of people in the room. How many likes did we get? 180? That's good. I'll take that. All right. So, you know, when I look at a stock graph, I look at a 3-month graph. Why? Because earnings plays a role. And, you know, I always want to make sure that the earnings picture is included. I look at support resistance, the 20-day exponential moving average. But when I look at your individual stocks, I do want to look at earnings per share and earnings growth rate. I want to make sure that if you're trying to hold on to these stocks for a long period, let's go see what the earnings picture looks like. So as I look at Palantir, I like the stock. It's still relatively new. It's an informational gathering company, and they've been getting contracts around the world for their information. They crunch all the data, and whoever, you know, the contract is for, they're able to easily use the data. When it first came out, I was kind of skeptical because I was like, man, that's Big Brother getting all up into my business. But it does give you the opportunity for a lot of the intelligence agencies to use the data to track for potential issues, you know, bad issues. So I do like the company. A couple of things have happened recently. The stock's price fell below a level of support at 30.34. The stock's price is currently below the 20-day exponential moving average. As the stock's price is is falling, volume is rising. I like that the earnings per share is higher than it was 3 months ago. I like the earnings growth. The company is being run nicely, that they are growing their earnings. It just may not be the right time to be in the stock right now. I'm going to draw you another line, former level of current support right here, a new level sitting at 22.42. If you own the stock long term, if the stock's price falls below that level of 22.42, you need to probably think about taking, if you got a loss, take that loss, use that money to put into another stock and wait for a better buying opportunity. All right, so that's, and Palantir, based upon that level that I just drew, is sitting a little bit of a level of a channel, but currently below the support, which is now resistance, and that level of the 20-day exponential moving average. Just keep that in mind. All right, Snap, running End of day basis, the 20-day exponential moving average is still in play. The stock's price is above the 20-day exponential moving average. Love the earnings per share. Love the earnings growth. Let the trade come to you. If it stays above that 20-day exponential moving average, you should be fine. All right? Don't let the intraday data spook you out of the stock. If this is a longer-term hold, use the end-of-day data to help you with that. All right? What else? Sleep number looks good. Why? Why is that happening? Because people want to get gooder sleep. I said gooder. People want to get better sleep. That's a beautiful looking equity curve staying. It wasn't a little bit of a channel, but how about that level of the 20-day exponential moving average serving as a beautiful level of support, a little bit of selling pressure today, all right, but clearly above the level of resistance, 20-day, good volume, good earnings growth. I like this. This is a good, I like this. I'll applaud you, and this stock is moving up like a 747 taking off. I like this stock. Again, a little bit of selling pressure today, but the stock's price looks good. STM. The semiconductor space has got a lack of semiconductors. STM, a little bit more erratic, a little bit more volatile in the move. Currently below the 20-day, big down day today. I do like it from an earning. Oh, look at the earnings per share. Lower than it was 3 months ago. Earnings growth rate looks good, but from a technical standpoint, looking at a graph, I'm not feeling it. And if you sit back and go, well, I'm holding it for the long term, at some point in time, you got to say when enough is enough, when a stock has gone against you. So let me do this. Let me give you a line in the sand. Here's a most recent gap. See that gap up? Beautiful level of support coming off of that gap. I'm going to give you a line in the sand sitting at 37.63. If the stock's price falls, if you're sitting there going, man, no, I'm going to hold. Here's your line in the sand, the last line of defense sitting at 37.63 if that's the case. All right, if that's the case, so just keep that in mind. The earnings growth, they are growing their earnings. I like that. The earnings per share is positive, but a little lower than it was 3 months ago. Just keep that in mind. Remember, earnings is the biggest engine behind the stock's price move. Let's go to the next one. CNO, Transportation Services. Woo! Stock's price ran, a little bit of erraticity. Yes, that's a Glenism. A little bit of erraticity right at that 20-day exponential moving average. So if we know that earnings is the engine that drives the stock's price higher, how about earnings per share now is lower than it was 3 months ago? Earnings growth rate lower than it was 3 months ago. Be careful with this stock. The stock's price is falling, but earnings is falling. Earnings growth is falling. Here's that level of the 20-day exponential moving average. I am going to give you another level to look at. Here's a level of support sitting at $6.35. If the stock's price falls below that, because it is technically sitting in a channel with that 20-day exponential moving average, if it falls below that, that's probably a good opportunity to think about getting out of that stock. For all of you who are putting new stocks in here for me to check, I'm not going to type them in today, but Joey put a link in the room for you already that if you want to take a look and have VectorVest analyze a stock for you, click that link and VectorVest will do that. Due to the bad market, what are your thoughts on holding some of these stocks until the market is in an uptrend again to see how it plays out? Jay, I'm all of the mindset of letting the trade come to you, and sometimes it's a bad time to even be in a good stock. So some of these stocks that look good, that you like or whatever, think about that. Sometimes there's a bad time to be in a good stock. You've got to make a decision on your own to know when enough is enough that allows you to fight to see another day instead of taking a big loss in a stock. When I'm looking at these stocks from a technical standpoint, that's for you to know what's going on so that you can make a decision on whether or not you want to hold the stock. And you know something, if I get out, then I just wait for a better buying opportunity, right? Instead of holding it down, which a lot of us do, why not wait for a better buying opportunity? Just keep that in mind. Does that make sense? Who asked me that? Does that make sense, Jay? All right, just always remember, you never want a stock to go against you till it becomes a big loss. All right. Do I have coverage on EV and AI? Christopher, I've done a lot of stories on our channel on EV. All right, so yes, level of support is a floor. When you walk on the floor, it keeps you from falling down. Resistance is just the opposite. If I'm in my room and I jump up, the ceiling resists me from jumping higher. So that's what support and resistance. And normally a level of support is where a stock's price stops going down and demand increases, shows that the stock's got a propensity to move higher. All right? All right, but right now on Alphria, a marijuana stock that 20 days done a great job of keeping you in the stock. Volume is leveling off. Well, does that make sense as the stock's price moves sideways? Watch the earnings per share. Earnings per share is falling over the last 3 months. Earnings growth is pretty solid, but it's negative 6%. Negative 6%. The stock is in an uptrend. I can see that on the graph. Relative value, the stock doesn't have good upside potential, so be careful with it. But it is clearly above the 20-day exponential moving average. If you own it, if it falls below that level, you might want to think about taking some of that off. All right, let the stock come to you. So Nuret, if I own the stock, if I'm looking to get into this stock, let the stock come to me. If I'm not in this stock, but I say for whatever the reasons I like it, I make sure that I buy higher than the current day, higher than the high here. So let me draw a date line. So if I don't see this, let me do this. If I look and say, man, the stock's price just went back above the 20-day exponential moving average, I like it. I put in an order higher than the high. Right now, the high price is sitting on this date, which was yesterday, at $20.36. Well, it's over $20. I'm going to look for an entry 12 cents higher than the high. So I go, what, 36, 46, 48. I put in a buy stop order at 20.48, letting the stock come to me. How about this? So now I look at today's data. Did that ever happen? What was the high price here? 20.31. That's on today's candle. It didn't come to me. I want to make sure that when I buy into a stock, I buy into a stock as it's rising. That's what I mean by letting the stock come to me. I put in an order higher than the high for the next day. All right, so there we go. Let's go. Wow, MPC, I like this stock. Over the last 3 months, bottom left, top right, stock's price is moving higher than the 20-day exponential moving average. Big down day today. A little bit of a candlestick pattern right there known as a bearish engulfing. It could be a possibility of a pullback on the stock. If I own the stock, I see this on the end of day, I probably think about taking some of that off the table, if not all of it, because that's a bearish candlestick, and I'm looking for confirmation the next day to see if the stock's price continues to go lower as confirmation of that candlestick pattern. Watch the earnings per share falling. Watch the earnings growth falling. Mining or petroleum is a field that I think is going to be on the rise, but I would let that come to me as well. So glad you record so I can watch later. Thank you, Glenn and Joey. You got it, Ninja. All right, let's go to the next stock. Ooh, apps. I like Digital Turbine. I have liked Digital Turbine. But even with that, remember, there's a bad time to be in a good stock. Stock's price is below the 20-day exponential moving average. I do have a line in the sand sitting at $70.65. If the stock's price falls below that, I probably want to think about taking that off the table, coming off of that high. I'd rather you not ride a stock's price down from its high. Learn to get out so that you can not let the stock go against you bigly. Yes, I said bigly again. All right, earnings per share I like, earnings growth I like, just not the right time to be in the stock. If I own it, there's my line in the sand sitting at $70.65. Lakeland, woo-wee, falling. Whose song was that? There was somebody's song. I think I'm falling in love with you. That was Alicia Keys. What you know about that right there? You don't know nothing about that. Anyway, Lakeland had a beautiful little run here, pulled back off of the high, currently below the 20-day exponential moving average. How about it closed here? You say, man, I got out of it, and then this happened. Notice it never got back above that 20-day or closed above that 20-day. Folks, this stuff works. This keeps you from second-guessing yourself. The stock price fell below the 20-day, still currently below. Would you rather get out there or get out where it is now? Just think about that stuff, all right? Think about that stuff. I do like the earnings per share. I like the earnings growth, but it's falling right now. I'd wait. Wow, NVIDIA is pretty choppy. Was in a little bit of a channel for a minute over the last 3 months. Man, big fall. It did fall below and then got back up, and look at that. Good, googly muggly. Now, do I have that? I do. Hold on. Good, googly muggly. And then Holy smoke. As the stock's price is falling. Notice that I have a line in the sand by way of support sitting at 537.07 and it's below it. At some point, folks, you got to take that off the table. You really got to consider doing that. I like the earnings per share. I like the earnings growth, but sometimes it's a bad time to be in a good stock. CTRM is a good stock, Stephen. I did a video on our channel on CTRM. It's got a lot of views. If you haven't seen it already, Stephen, take a look at it. I like that stock, by the way. Weight Watchers. This is where you watch your weight. Are you watching your weight? I'm watching my weight get bigger. Good, googly muggly. But that's all right. Weight Watchers is a little bit of a channel right now. As a sideways move, be careful. Notice that the stock's price went below the 20-day exponential moving average, moved up today. I'd want more confirmation behind that move. Let's go above that level of resistance sitting at 28.24. If you're in it, there was a good level of support right here sitting at 25.61. Notice it never broke below it. So if you're still in it, you're still fine. I would really like to see the stock's price close above today, that level of the 20-day exponential moving average. And if I'm thinking about getting into it, I'd really like to break above that level of resistance. Earnings is higher than it was 3 months ago, and earnings growth rate is up there. So very difficult to time the market. No, it's not. I'm going to show you something real quick. No, it's not. And this is for the people who are not subscribers to the software. I got several different market timing calls. If I'm more of a conservative investor, we're in an up call, and we have been since 11:10. If I'm more of a prudent person, I got a middle of the road timing signal. I've been in since 11:3. If I'm more of a trader, I got a trading timing signal. I'm currently in a down call on that trend. So Tonin, oh no. We have 7 different market timing signals to use no matter what type of investor you are. For those of you who are not subscribers to the software, I just introduce you to our ability to time the market no matter what type of investor you are, folks. All right. Glenn should look at his weight daily. Daniel, I do. That's why I'm fat, because I do look at my weight daily. Stop laughing, Joey. All right. So for those, that was for Toinin, but a lot of you out there didn't know that we can time the market. We've got 7 different market timing signals to help you time the market, or no matter how you invest. All right. Someone needs to buy you a T-shirt that says Bigley. You hear that, Joey? I want a T-shirt that says Bigley. I like it. All right, Joey likes it too. All right, let's get to the next stock. Where else can you learn about the market and have this kind of fun? This is why I tell you to share this with the people on your social circle. Right, Joey? Mm-hmm. We have a lot of fun. We do have a lot of fun. HZO, like the equity curve. Earnings per share is growing. Earnings growth is growing. I like the equity curve. Notice that, look at that pullback today on end of day. Is it still above the 20-day? Yes, it is. Yes, it is. Big volume to the downside, a lot of selling pressure. But on an end of day basis, did it close below? No, leave it alone. Now, if you say, well, if it closes below, I still want to give it a little bit more room, you got a level of support sitting at 39.98. This is the analysis that helps you make the right decisions, folks. All right, but I like the equity curve on this. This looks good. I like the nice steady rise in earnings and earnings growth. Leave it alone. If you own it, leave it alone. All right. What else is here? Apple. I love Apple. I think it's the best stock in the world. Remember I said, sometimes it's a bad time to own a good stock. This is one of those. Apple fell off that high. It hugged that. No, actually, that was the good level to get out right there on 129.21. Good level, get out. And then you said, no, I want to give it a little bit more room because I really like Apple. All right. That was weird. And here's another level of support sitting at 126.40. That was your last line in the sand. If you're not out of it now, you got another line in the sand sitting at 120.57. Notice that, though. It's getting lower and lower and lower. Do you want to assume a big loss in the stock or bigger than you want? No. That's why you look at a graph. Would you rather get out there at a price of 131.96 or still be in it at 121.16? Think about that. All right. Love the earnings per share. I love the rising earnings growth rate. May not be the right time to be in that stock. Can you do a video on covered calls? I probably will not, King, but I can get somebody to think about doing that. We actually have videos on covered calls. actually. All right, ABBV sitting in a channel. This is why I love support resistance. Not only can I see that it's in a channel between a level of resistance and support, I can see where it is in respect to those levels. And now notice that the stock's price bounced off support, clearly above the 20-day exponential moving average. I'm going to give you a price target. Where it is right now, if history still holds, your price target is sitting at 113.41 if you own it. All right, once it gets back to that level of 113, it's going to have a hard time to get out. I'm going to tell you to do one of two things. Sell half, lock in the profit coming off this level of support, and let the other half ride. If it pulls back, at least you've locked in some profit. Or when it gets to that level of 113, you might want to think about taking it off because it is in a channel. All right, earnings per share is rising but starting to fall a little bit. Just keep that in mind. Earnings growth rate is a little bit higher than it was 3 months ago. That's fine. 3 months ago. There we go. What else is in here? Ooh, Sundial. Lord have mercy on that stock right there. Bless its heart. That's the Southern way of saying, All right, so I look at that and I say, yeah. Stock's price in the healthcare marijuana field, I own it in my Robinhood account. I put $100 behind it, just for your own edification. I'm always transparent about stocks that I own in this room because I don't want anybody to think that I'm trying to run a stock's price up. But that $100 investment is down to $67.58. It's only $100. So as I look at that, just be careful with Sundial. I like that legislation is going to go out, possibly decriminalizing marijuana. I like the lower dollar stocks to grow in that space, but right now may not be the right time. Always remember, whether it's a stock that you like or love, there's always a time when it's not a good time to be in a stock. Always keep that in mind. You might want to try seafood diet, seafood and eat it. Yep, that's Joey's on that diet. Me and Joey both are on that diet, actually. We seafood and eat it. Watch the earnings per share is falling. Earnings growth rate is higher than it was 3 months ago, but watch that 20-day exponential moving average. All right, what else? Woo! Who gave me that stock? That's a good-looking stock right there. Beautiful. This stock throughout the last 3 months has not crossed below the 20-day exponential moving average. If I'm not in the stock, this is where I mean let the stock come to me. See the high sitting at 41.55? I would put in a buy stop order at 41.67 to make sure I'm still buying into a rising stock. Love that equity curve. Earnings per share higher than it was 3 months ago. Earnings growth rate higher than it was 3 months ago. Volume's been pretty steady. I like this stock. Holy smokes, I like this stock. And this stock is really taking off like an airplane. I really do, and you don't want to miss the train on this. You really don't. I like the stock, but make sure that you buy it as the stock is rising. All right, what else? CCIV, this is a SPAC. Something about Lucid, a thing with Lucid. I barely saw that. I'm not feeling it right now. Clearly, look at the fall below the 20-day exponential moving average. I got a beginning level of support sitting right here at the low of 1620. The volume is picking up to the downside. I've got not enough data to give earnings and earnings growth. But yeah, and the stock moved to a sell. I'd be careful with this. All right. I love that SPACs are getting popular, but man, I think a lot of people took their profits. That's profit taking. The stock price closed at 57.37 and then dropped down. Wow, closing price at 35.24. That's a big hit. That's a big hit. Now, if any of you were in it and you're like, man, but I'm already in it and I don't want to do it, and I got nothing for you except for you got to learn when enough is enough. Now, a lot of you will say, well, I'm already in it. I'm going to leave it and let it come back. Fine. As long as you're willing to do that, then leave it alone. And you're going to say that, well, it's going to come back. Okay. Problem is when. And are you willing to sit and wait? And if you are, leave it alone. If you're not and you took a big hit, you might want to think about closing it and put that money towards something else to make you money. Again, I'm never going to be here to tell you what you want to hear. You need to know what you need to hear so you can make the right decisions. All right? Let's go to the next stock, FUV. Wow, it was rocking and rolling and then bam! Now, why is that 20-day exponential moving average so important? Would you rather get out when the stock's price closed at 24.02 or still be in it while it's at 17? I like the earnings per share. I like the earnings growth rate. But from a technical standpoint, looking at these graphs, was that a good opportunity to lock in profits if you were in it or mitigate losses if you were in it? Absolutely. All right, stocks price is moving down. You say, well, what do I do now? You got to make a decision. Let's do this. I'm going to draw a line from the most recent 3-month low sitting at $10.72. That's a lot more to give away. If you're in it, that's all. And if as long as you're willing to do that, that's on you. Again, I do like the earnings. I do like the earnings growth. But that's another $7 down. Are you willing to do that? The stock was trading as high as $36.80. Learning to use something like a moving average crossover is a great way to lock in profits, mitigate losses, and move on. And if you really like the stock, wait for a better buying opportunity. Wait for the stock's price to go back above the 20-day exponential moving average. All right, what else is in here? LITB. Ooh, look at that level of support sitting right at the value of $3.54. End of day, did it break below? Not yet. End of day, did we go below the 20-day exponential moving average? Absolutely. I like the earnings per share. I like the earnings growth rate. Well, look at what the stock's price is doing. If you're in it right now, you still say, well, it may be below the 20-day. Let's see if it falls below that level of 354. It's 2 cents off of that right now at 338. If it doesn't close below it, leave it alone. If it does close below it, that's a nice drop from a level of 569 to where it is right now. You might want to think about getting out of it. CLSK, love the earnings growth rate. The stock is sitting in a channel right there at that level of support of 2409. Notice that VectorVest draws all of my levels of support and resistance for me. How cool is that? And the stocks to sell recommendation. It fell below the level of the 20-day exponential moving a few times in this channel. Just be careful with it, all right? And last but not least, we've got Flugent was a stock that was rocking and rolling. And you know something, if I got in, was that a good opportunity to get out right there? Sure it was. Earnings per share looks good. Earnings growth looks good. Use the technical analysis of a graph to help you out. All right, I'm done. I went through everybody's stock. I'm tired today. Was that a lot of energy or not today? That was a lot of energy. We had a lot of fun today. All right, if we had a lot of fun and you liked it, hit the like button. If you're new to the channel and you haven't subscribed yet, subscribe. If you haven't shared these videos with people in your social circle, do that. Folks, I'm no nonsense here. And again, I pride myself on telling you the things that you need to know more so than the stuff that you want to know. And I give full-blown analysis by way of the VectorVest software. Notice that a lot of this is not my opinion. I'm looking at the software to help you guys make a decision. All right, so that's what it's all about. For all my new people that were here today, hopefully you do subscribe to the channel. For all my regular people that are here today, always thankful for you guys supporting the channel. We are definitely growing, and I want to keep that going. Those 2 contests that we got going on, free access to the software looking at the 28-day challenge, free access to the software doing the challenge. We're going to show you how to look at your stocks, manage your stocks, use market timing, and know when to buy and what stocks to buy. It's free. 28-day challenge. Take advantage of it. And for those of you who are trying to look to win $250,000 on VectorVest, do the bracket stock madness. All right? You guys are awesome. Love the app in these sessions. Thank you, Sis. For all you guys putting good comments out there, I like it. I love it. And for all of you, I'm all right if you don't agree with me. I'm okay with that. All right? And my job is to bring you the news and bring you the data behind the news. That's what we do. Right, Joey?
That's right.
Good job today, man. Good job today. Thank you, guys. Until the next time, see ya.